Yo, it's your boy Colin, aka Colin Trades CSP, back with you with another video. Last week we had a pretty interesting week. So basically, how the week started, we were overall bullish Monday, Tuesday, and Wednesday, and then we did get a continuation sell off Thursday and Friday with the escalation going on in Iran, with potential boots on the ground, a lot of oil, oil refineries getting destroyed. So overall, we did get a huge sell-off come Friday, breaking very key levels to the downside. So overall, one thing we need to pay attention to this coming week is we need to pay attention to the potential Iran news on war with oil. And then also we have key data like CPI this week, GDP, PCE, and so forth that we need to make sure that we're paying attention to going in this week. So with CPI on Wednesday, we want to make sure that the Fed's decision on rate cuts still stay the same of potential 2 rate cuts. But because of oil going up this past couple of days, going in passing $100 a barrel, that is going to be a very, very important indicator that we need to pay attention to coming next month's CPI, as inflation will most likely start to tick up to the upside due to those oil numbers going up. So let's sit back, relax. Basically, this is a new week. Let's make sure that we're prepared, when it comes to economic news that is coming out, but also we want to make sure that we're prepared for when it comes to the charts, as key levels were broken. So we want to make sure that we understand how we want to move forward this coming week. All right, so as always, if you like this video, if you have any questions or concerns, leave a comment. Don't forget to hit the bell notification for more videos that come out. All right, so let's start off. Let's look at the economic news that is coming out this week. So what's coming out this week? When it comes to Monday and Tuesday, we don't really have nothing going on. Nothing scheduled for Monday. Really, the main thing what's going to happen that people want to pay attention to, though, is how the markets open on Monday. With oil raising over $100 a barrel, there's a good chance that the stock market is going to gap down due to these issues, what's going on in Iran. And then on Tuesday, same thing, existing home sales and NFIB optimism index, really nothing to pay attention to on that. But coming Wednesday, we do have CPI. So the consumer price index, this is going to be probably one of the most important CPIs that we need to pay attention to. Like I said before, with oil prices going up, that's going to be causing CPI to come in a tick higher next month as the war started this month. So that is something that we want to make sure if we are ticking down, that the government knows that next month the CPI is going to come in higher due to oil prices coming in higher as well. So this core CPI and CPI data needs to come in lower than expected, just so that the government knows that when it comes to interest rate hikes, it's just because of oil. If they can get oil down, then they know that CPI is coming down as well. But if this is ticking higher, then the Fed do have a decision on possibly, not the 2 rate cuts, but also maybe possibly increase or continue to pause going forward, which then leaving only 1 rate cut, which the market does not want to see. Come Thursday, we really have nothing. Initial jobless claims, maybe could be a market mover. U.S. trade deficits, house starts and building permits, really nothing to go off based on that. And then lastly, on Friday, we have a lot of data going on, like GDP from Q4, personal income, PCE reports. So basically, the personal consumer index, but the PCE index, we will want to make sure that we're paying attention to, is because this is another indicator when it comes to the Feds making the decision on how they want to go about moving forward with rate cuts. So let's start off looking. I do want to do something when it comes to looking at the weekend's future market. As like I said before, with oil prices skyrocketing over $100 a barrel, this is going to cause the stock market to most likely open downwards, which you can see in the futures weekends market. You know, this is not really a guaranteed number, but it's something people pay attention to see how things are going on over the weekend. So as you can see, the market, the tech, basically NQ, is currently down almost 1% in the weekends market. Then when it comes to the oil, as you can see, we're taking up to the upside. Up 6% over the weekend. This is going to be something that, you know, the markets are going to be paying attention to as things continue to escalate in the Mideast regarding war and stuff like that. So this is something we want to make sure, you know, when it comes to the overall market and gas prices and overall CPI and interest rates and stuff like that, that we make sure that this is ticking to the downside. If not, if we continue to see oil prices continue to go higher, you know, this is a very, very, in the long term, very bad for the market overall. So that's something you just got to always keep an eye on. So basically, you know, let's start off looking at the charts overall. So looking at ES, if the market, you know, on Friday, as you can see, we did finally get the gap down and with a full body close to the downside, breaking this overall, range that we've had since the beginning of October. So, you know, this is a very key level that basically whoever is long in this area is now trapped up here and potentially can get squeezed out and liquidated to the downside. So as we can see, we were stuck in this range and now we're breaking to the downside, which then there's a good chance what we're going to be seeing if we do gap down roughly under 6,700 is start to look to test the bottom of this range roughly at 6,500. You know, this is probably the first key level that I'm going to be keeping an eye on this week as potential bounce. But again, as the war continues on, this can get very ugly very fast the longer this takes and this war continues, as oil prices will continue to rise and stuff like that. So this is basically really the only thing I'm keeping an eye on. If we do gap down come Monday, is this 6,500. Now, if, you know, as we saw in the past 2 weeks, as we most likely gap down, it was always bought up, started the market open. So if we do get the same scenario come Monday where we're gapping down and then instantly bought up, then the only number that I would not be taking longs, but I will be keeping an eye on is this 6,700 range, because there's a chance that we just basically bounce into this area and then potentially just another short down to the downside. That's another play I'll be looking at. If, of course, you know, you don't want to be completely bearish, there couldn't be news come out Monday morning or Monday afternoon from Trump basically saying that they're unlocking their reserves, allowing oil prices to come down. You know, if we do get that news and potentially we become bullish, something I wouldn't be basically confident until we basically clear Friday and then even Thursday's highs, which then we're looking at 6,900, but then at the end of the day, we're just sitting in the mid-range of this. Now, that is completely possible, but it's, again, we do need to see some serious I can't say the word, but implications of why this market deserves to be in near almost all-time highs. As of right now, with the issues in the Middle East and stuff like that, I wouldn't be basically anywhere bullish until that is basically cleared out. And so any type of longs or any type of green that we get, it could be just people getting, you know, trying to get out of their position and just basically allowing the retailers to get stuck as buyers, and institutions are selling into those retail and basically using you guys as liquidity so that they can get out if this war does to continue a little bit longer. Now, looking at NQ, as you saw in the futures, looking at NQ, we're trading at 24.4. Now, if that's the case, we're most likely looking roughly around down here at this rough support. You know, just like SPY or ES, we basically cleared the top range. Now we're looking at this second bottom range that we've had before, that we started back in early October, sometime in late September. So now we're looking at this bottom half of the range. If we do potentially gap down into this support, you just got to be careful, as buyers might want to hold this position and not trade lower, to which then they'll look to push this to the upside, allowing for SPY and ES to get to that midpoint range if we do basically gap down into support. Now, if the market is bearish completely, then something to keep an eye on is if we do get a little basically test of this low outside of the range of the 2400, and then potentially bounce into back to the top of this range. So that's two things that you need to pay attention to as we go into this new week, as potentially we're most likely going to be gapping down on Monday, which then just make sure to keep an eye on some key levels like support and resistances, as ES, like I said, has broken the major top side range going to the bottom side of the range, and NQ opening at the support line at the NQ level, the bottom of the range. So that's something to keep an eye on going into Monday and Tuesday before we have our major news catalyst on Wednesday. Now pulling up BTC, as you guys can see, I still have my head and shoulders. Clearly we're deciding to break to the downside. As you saw on Tuesday and Wednesday, I believe, of last week, or 2 weeks ago on Thursday or Friday, we did get to that 75,000 range, testing the neckline of the head and shoulders, and we instantly rejected it. So what that literally telling me is that the bulls are not there or strong enough yet for this, which then the bears are now taking control. We want to see, if you were a bear, a break below 60,000, which then we can finally test the lower range of this whole range, roughly around that 50 to 55,000 range. If we do get that, then I'd be looking at very good key positions for some leaps on some miners, as this would be a good entry when it comes to that $50,000 range. Now, if we do get lower, then I'll be trimming. But again, just something to keep an eye on as we do reject this 75 and look to come down below this 60,000 range if we do. So those are key levels I'm going to be keeping an eye on when it comes to BTC as we're trading lower. So now, at the end of the segment, I always like to give 3 potential trade ideas that I'm looking at every single week. I like to play. So first, one thing I'm going to be keeping an eye on is AMD. As you can see, AMD has respected this $200 level multiple times, and we've rejected it recently, I believe on Wednesday and Thursday, which I did play and made a decent profit on. So Wednesday and Thursday of last week, we've rejected. And now we're coming to a very key pinnacle point on if we want to fully gap this down to 170 or potentially bounce at this 185 area where it's last touched back in August of 2025. So this is something I'm going to be keeping an eye on for a potential. If we do get a gap down below 190, I'm going to be keeping an eye on 185 for a potential move back into 200. If, of course, like I said, NQ at support, if they gap down into that 2400, I would want to keep an eye on that. If this gaps down into that 190, 185 area, I want to basically take a stab long into 185 to back to 200. Now, if the market does want to dump, the big key number, if this does break 185, I'm going to be keeping an eye on this gap down, as this can clearly come down to 170, which then it would be a nice stab short for a break and retest of 185 to then gap fill down to 170. We do have a gap down as well further down to back to 150. That would be a nice long position to enter if you want to own the shares long term, 150. But definitely going to be taking a stab if we do break below 185 to then test 170. If we do see NQ bounce at that 2400, then I'm going to be definitely taking a stab long back into 200. Next one is Apple. Apple's been getting beaten up the past couple days since basically the start of the run back in February, up to 275. They announced on Thursday or Friday of some new stuff, new tech and stuff like that. Market didn't like it, continued the sell-off. So as you can see, from 275 back down to 257, I do want to take a stab if we can get a gap down come Monday. If we get into 250, I would love to take this longs back into 270, 280 for potential longs. Now, if the market does want to continue to sell off, then of course I'll probably wait on the sidelines till it gets back to this 225 area for a potential short. If we get to 250, reject it and continue lower to 225. But 250 seems like a big psychological number, and a very nice hold for longs, as Apple is probably one of the most, I would say, safest. I wouldn't say safest, but it is the most well-known companies to last the longest out of everybody, next to Nvidia, of course. But if you want a safe haven stock to not, keep you up at night or allow you to sleep at night, Apple would be a very good own, at that 250 to ride back to that 280 and even 290 area. As they just continue, they have the most cash. They can continue to innovate and get better every single day when it comes to that. So Apple 250 longs, that's a nice play I would keep an eye on if we do decide to gap down on Monday. And then last one, keeping it in the chip sector, I'm going to keep an eye on is Nvidia. As you guys saw earlier in the week, last week, Nvidia tested this 185 area. Another one I played last week. Made a nice killing on that one, as it did push down to the downside, allowing me to make 25%. So Nvidia, rejected this 185, and now it's pushing to the downside. If there is a good chance that we gap down on Monday, I'm going to be keeping an eye on this 174 to 172 area, as it tested this area multiple times since July of last year. So as you can see, it's 1 touch, 2 touch, 3 touch, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 times. So it's touched this area multiple times and respected this level. So if we do decide to gap down, then of course keep an eye on potential bounces. We haven't been here since February 2026, completely bounced off of that level. So if we do get here, I would love to take this stab long for a potential move back into 185. Nvidia can move pretty rapidly throughout the day. I've definitely had my fair shares with the stock when it comes to up or down in my favor or not in my favor when it comes to these levels. So I would definitely keep an eye on that level for potential long. Now, of course, if we do reject to the downside, there's really nothing holding this back other than key psych levels like 165. But if we do potentially reject this 170 area and we decide to start flushing the overall market when it comes to issues with the Middle East, issues with China and Taiwan, issues with multiple things, and oil prices and stuff like that, if I had to take like a major short in the stock, I would love to at 175, basically shorting this down all the way back to 150. That'd be a nice solid trade for a long-term trade. And also at 150, it's a very good psychological level for people to start taking long to ride it back up to that 220 area, or not 220, but 210 area at all times highs. So overall, those are basically the 3 stocks I'm looking at, but overall my standpoint on the market, as of right now with the issues in the Middle East, I kind of keep it a neutral tone, as things can happen when it comes to oil prices rising, causing CPI data to come in bad, causing Fed interest rates to possibly pause or hike to increase interest rates. So I can't really be completely bullish when it comes to those news that's coming out, but also I cannot be completely bearish as well, as all it takes when it comes to this market is a Donald Trump tweet to allow this market to just shoot back to the upside. So, you got to be able to trade cautiously in this type of market. You got to trade safe, make sure to play key levels, because, at the end of the day, your position can get reversed very quickly when it comes to war going on or just a potential tweet from Donald Trump. So that's basically all I have when it comes to it. I hope you guys have a good trading week. Make sure to trade smart and trade safe, secure that money, and end the week pretty good, and just pat yourself on the back because you survived another week of this type of sideways action. All right. So with that being said, I hope you guys enjoyed the video. If you have any questions or concerns, leave a comment down below. I'm more than welcome to answer it whenever. If you have, any trade ideas or any tickers you want me to look up next week, you can let me know in the comments. I'm more than welcome to assist you with that as well. But with that, hope you guys enjoy the rest of your day. Have a good trading week, and I'll catch you guys next time. Peace.